We are live.
Hi, everyone. Welcome to our market talk. So we had a great 2 weeks. First of all, we had this great squeeze in all the risk assets, and now markets are falling. So I'm sure we have a lot to talk about. What we think will happen in upcoming 2 weeks and what we did during those 2 weeks. So first of all, I want to start from Ramadan, because Ramadan, you was the only bull 2 weeks ago. So let's start with you. So what you see in the markets now, what you did, and what are your views?
So I have officially left the bull camp for now. I've become a bear. So over the past couple weeks, I started selling some longs and adding to shorts on the way up. So I feel like I'm at a good place right now where I want to continue to hold my shorts, actually. Anything I've learned from these last bear market rallies was after the top, everybody's expecting like, all right, we're going to bounce and go higher. We're going to bounce and go higher. Then it just slips lower and people cover their shorts too early. People try to sell too late. And so I'm holding my shorts a little bit longer, at least until we get back to that 3,800, 3,850 area. So what am I seeing right now in the market? What the reasons I started going short was I started seeing the IVOL premiums going down along with my signal strength. Those started to turn over, top out, turn over, as well as us getting top end of the range. And you start seeing a lot of people talking about hedge fund short covering the weekly short flows. It was like at a 2 sigma for the past, I don't know, 50 years or whatever. Maybe not 50 years, whatever. Also, we were at the trend line everybody was watching. It was just lower highs, lower highs, lower highs for all of 2022 and 200-day moving average. So all those things coincided. It was like, this is a place where you want to start, get rid of your long, start adding shorts, take the shot here. Something I'm finding interesting right now in the market. So the dollar and the 10-year have not done anything right now. The 10-year yield, they have not rallied or gone up or down during this top after the market has just crashed recently, if you call it crash. But what I'm expecting and hoping right now as a bear is that we do start to see the dollar and yields start to get a bounce up, and that'll put more pressure on equities. So another interesting play on that, usually the 10-year yield and oil, they usually track each other pretty well. So right now what I'm seeing is that oil's at the top, is like right at trend at the top end, and 10-year yields are right at the bottom. So I just took a short on both energy and bonds, and see either right. I could be right on both, I could be wrong on both, but what I'm guessing is that bonds will start to get we could see like demand going down, and if the correlation starts to converge, that's why I took a short on both. But bonds could go up. If I'm wrong, I see bonds going up and oil going down, because bonds start pricing in recession. So they'll start catching a bit there. Oil will go down because of less demand. So if I'm wrong on one end, it'll be the bond end, in my opinion. What else? So yeah, we start seeing mixed economic data. Industrial production's lower, retail sales lower, but employment is looking strong. So looks like that's going to put pressure on the Fed to stay at it, along with financial conditions easing, national financial conditions, and AAII sentiment all looking more bullish right now, which is a good, usually contrarian indicators. And yeah, next week we got GDP, PMI, PCE, and then the Fed after that. And what I'm expecting with the Fed and CPI is I'm thinking that the Fed's goal is to get Fed funds rate above CPI. So they raise another 25 now. They'll get us to around like what, 475, 5? Right? Anyways, we still have 2 more CPI prints after that. So we can see how low CPI actually gets, if we get below 6 or not. And then I think that'll really drive the March 22, that FOMC will be really critical to see where we're going to go. They're going to keep trying to fight and get above CPI, and if CPI is going to stay sticky higher or not. And yeah, that's what I'm seeing. I know it's a lot.
Yeah, totally. A lot of people, me included, were thinking that dollar will move first. Of course, that was not the case. Stocks moved first. Interesting. Okay, Brian. So, what are your views? What you see in the markets, and what are you doing?
Sure. Yeah. So start of the year has been pretty terrible for me. I got short in the hole. We talked to the last meeting. I was super bearish, and I rode all the shorts from December into that first 2 weeks of January chop, and I just stuck around for way too long. And got squeezed pretty hard in that high beta squeeze. So not the best start of the year over here. One of the big things I missed that I'm kind of pulling forward was looking more closely at the high beta, low beta ratio. So if I look at SPHB over SPLV is an easy way to do it. That one right off of December 28th, as soon as that was the day of stocks bottom too, that one completely just started ripping, and it didn't stop at all until today. And if you look at MFR, that one has an extremely high Earth exponent at like 0.8 right now. And so that was a big thing that I missed. Stocks were mostly flat through the first week to 1 to 2 weeks of January, and the big equity stock market squeeze didn't really happen until the last week or so. But high beta stocks under the hood were just squeezing super hard. So despite a flat index, I still kind of got whacked at the start of the year. So took my licks and moved on along the way. But yeah, so like from here, I'm watching that ratio really closely because it has such a high Hearst. So if we closed red today, we had a big gap down the open and then kind of traded back up a little bit, but mostly closed down 1.25% today. So for me, that's a really good sign for the bear case. Even yesterday when stocks reversed, it still closed green. So it was still kind of a risk on environment, but now that one's showing signs of turning lower, if that can continue lower tomorrow, that's a really good sign to me that it's okay to be a little more aggressive on high beta stocks on the short side. I'm looking at that one, then I'm looking as well at your favorite VI, XLU IWM. That one as well. Called it as well. That one topped on December 28th, the same day that high beta, low beta peaked and bottomed, and continued higher. And I've actually started running the correlation between the two, and they're very inversely correlated. So like on a 30-day basis, XLU IWM to high beta, low beta is at a negative 0.64, and on a 5-day basis at negative 0.71. And XLU IWM is also very inversely correlated to bonds. So to IEF, it has a negative 0.53 on the 5-day. So what I've kind of started to take these two, looking closely at these two ratios, is really explain the sort of regime position we're in. You said that XLU IWM, that one did really well during the inflationary environment we were just in all last year. And once we kind of got into this, disinflationary, immaculate Goldilocks type thing that everyone's calling it for the last 2 weeks, that's when it's really gotten pounded. And so the question really for me on that one, is that one going to bounce here? Today, it bounced on the open. There were some signs of hope, and then it closed barely red, pretty much flat on the day. So nothing really to glean there. I'd be really curious to see if that one can maybe bounce here. It's been 1 day in bearish trend in MFR. It's like right at a key spot for Raphael too on his signal. So curious to see where that one goes. And then high beta, low beta, looking for some continuation lower on that. So those are two metrics I've added into my process. Otherwise, so from a gamma range perspective, 395 is gamma flip, and then we have absolute gamma at 390 right now. And then you also had a put wall there. It was jumping between 390 today and 385, kind of deciding if we were going to continue downside. If VIX can hold the bid into tomorrow's OPEX, then we'd probably be looking at 385, testing down there to the downside. Didn't get it today. They ripped it back, but then at the close, they failed at 390, and looks like we closed right at 3,900, which is the same level on SPX absolute gamma there. So right at a point where you get some overnight tape bomb, we could dump lower. Luckily, there's not really any catalyst tomorrow that, in my opinion, should cause some kind of squeeze. So it could just bounce on nothing, or it could continue lower, mainly pressured by gamma, because otherwise I don't really have much to get me that excited about shorts right now. Like fundamentally, I'll talk about that in a moment. Fundamentally, I'm super bearish right now. I think there's a lot of risk, but signals wise, like correlations are super light right now. Stock bond correlations are negative on the 5-day. Sector correlations are not extreme, so kind of weak right now. And then trends went from strengthened to slightly weakened today, and then they're kind of in an uncertain spot right now. So unsure on that one. And so really all I have is the potential that maybe Hearst exponents start continuing to strengthen. So those have been strengthening under the hood into the down day yesterday. And then today we'll see a lot of names close red today. So that would lead me to think there's potentially continuation lower tomorrow. So I'd like to maybe see Hearst continue to strengthen after I get the overnight data from MFR tonight into tomorrow. That would give me some good reason to stay short tomorrow. And I'd like to see correlation strengthen to a down move. And so for me, I'd like to see bonds continue a sell. So they were down today. They have strong Hearst. So hopefully maybe that means they can be down tomorrow. And I'd like to see stocks and bonds positively correlated again. I'd like to see the dollar not be an absolute disaster. That thing it just can't hold a bid to save its life. The Hearst is really weak. So I think we're closer to the bottom obviously than we are at the top, but like I think we're somewhere near a potential bottom on the dollar, both from a macro perspective as well as from a signaling perspective, just because Hearsts are pretty light. But I mean, it's bearish trend, and the stock dollar correlation softened today again because dollar closed red with stocks as well. So we saw a bid for the dollar yesterday with VIX catching a really big yesterday. Long vol was like the best thing on the book yesterday, so that was a good sign. And then no fall through today, so I guess we'll see what happens tomorrow. But if we can't hold below 390 tomorrow, I'd probably be looking to reduce shorts and just wait and see what happens next week. From a macro perspective, it's been really interesting to see what happened over the last 2 weeks. The bit and I was a proponent, talked about it in the last podcast, the last market talk, and then I've been posting about it a bunch on Twitter about just the fact that I don't see the Fed go into 25 basis points in February 1st. And at this point, though, they're absolutely trapped into doing it. If you look at Fed fund futures, and they never disappoint the markets unless they try to lead them in the right direction before. It's like a 93% chance they hike 25 here. And then now, as of this morning, it was even a higher, it was the most probability that they don't even hike at all in February. Excuse me, it was a higher, so the current most likely probability is that they hike 25 in February and then 25 in March. And then it's even like a 22% probability that they don't hike at all in March, which that's crazy. Just listening to JP, and my feeling is that that's off the table. And inflation's come down a lot. We've seen 3 huge drop downs in inflation with no confirmation from the labor market. And the only way we've seen this kind of steepness of inflation is when we're going deeply into recession. Then we don't go into recession until the yield curve uninverts. And so the way that commodities ripped over the last 2 weeks alongside all the high beta crap ripping, it doesn't make any sense. That this is not, in my opinion, action that we'd see if we're imminently going into recession. We see nothing in claims, nothing in labor that says that. So I think there's a lot of risk to the hawkish side, whether that is the market getting scared that inflation is staying around the 6s, or inflation surprises to the upside, or the Fed just comes out and says, whatever's happened in the last 3 inflation reports, not enough for us, we're still hiking. And so because of that, I like shorting bonds here a lot, and I like shorting stocks a lot from a fundamental perspective. Signaling, I'd like to see stocks and bonds recorrelate positively. But I think the playbook is the same thing that worked for most of last year, and everyone's now gotten off of that, selling dollars, starting to buy bonds here, and dropped all that. And you see that in that XLU-WM spread. Now that spread, it rallied a lot during actually the start of the BMR from November to December, and it's just pulled back now. So we're still well off the November lows. So, if I see that thing bounce, now potentially. I think we're closer to some kind of incremental Fed hawkishness coming back into the market, and that's the next catalyst for this to go lower. I can't pinpoint exactly what it's going to be. It could be anything as simple as Jerome sending a message to his boy Nick at the Wall Street Journal and him putting out an article that they want to do 50 at the next meeting. Who knows? That could drop tomorrow. So I could see that happening. And I think the market, the biggest reason it probably dropped in the last couple of days is partially OpEx related, and also partially just because we've priced in, like, I think as dovish as you could possibly price the Fed in, away from not hiking at all and then next cutting, which that's not happening at all. So so fundamentally I'm super bearish right now, despite all of the fun Goldilocks talk and everything. Signaling wise, not there. And if we can't fall through tomorrow, I'd probably be a little cautious on shorts. So that's me.
Yeah, tomorrow is really an important day, especially from upside downside perspective. And actually, it's very nice that you're doing correlation on spreads. I do that also. So yeah, it's a great way to find ideas and signals. Okay, so today we have a new participant, and I'm very excited about that. So Ted Darling. So Ted, first of all, thanks for joining, and maybe tell viewers a little bit about yourself, and then what are your views on the market and what you see.
Yeah, thank you. Appreciate being able to join, guys. Yeah, I'm an individual investor, trader, also a CFO for a digital marketing agency. I do this as a passion, and I'm nearing retirement and hope to do this more on a full-time basis, just so you know. People may know me somewhat from Twitter, and where my framework is a macro framework with a lot sort of nuance within that, but my focus is really around sort of like you guys, understanding the growth and inflation cycle. Where are we in that process? Understand what policy is doing within that context, particularly focusing a lot lately. And I'll talk about that and show a few graphs around market liquidity. And then I'm also looking for what's working in the current regime. I do a lot of work on individual assets in terms of how they're trending or not trending, and looking at technical analysis as well as range signals to enter or exit positions. I'm not a day trader. I tend to build positions. I like to have sort of longer term positions. I like to be able to trade around them. So I like to sell at top of range and buy at the bottom, and just keep doing that as long as I can, as long as something's staying in place. So like many here, I was bearish throughout 2022 and was pretty, we had a stagflationary environment pretty much throughout the last part of the year. But what I noticed is towards the end of the year that, things started to shift. And if I can share my screen, I'll just kind of run through a few things that I was observing coming into January 1st.
Yeah, sure.
So this is a fun chart. Everybody's familiar with this, I'm sure. This is the balance sheet, Federal Reserve balance sheet. They've been sucking liquidity out of the market just on a regular basis, but we've had the Treasury fighting against that, and we've also had some I think Brian referenced or Ram referenced financial conditions has been a constant issue. But what we noticed coming into year end was, and this is a lot about end of quarter positioning, of course, but reverse repo, which is basically money market funds, is the way I think about it. Really spiked into the end of December. People were clearly not where the market had been down. I think it bottomed on the 28th, but coming into the 29th, 30th, a lot of funds had come into money market, and I commented that I thought that was going to make a messy start for risk assets to start the new year. But what we found out, of course, was as soon as we started the new year, about 300 billion of that 2.5 trillion came right back into the market. So I was looking at that and wondering, what's going on there. At the same time, we had this report out about Russia's oil ban, and basically what that meant was that $60 oil priced or less than that had to go somewhere. So Russian oil had to go somewhere, and where was it going? In my view, it was going to China and India. And because they were well supplied, my feeling was that goods inflation, at least in the near term, was unlikely to rise, and that likely, there was some sort of cap in terms of oil prices. So that might put a good bid under inflation. Or not a bid, but really a cap on inflation. The other thing that I was observing is that, and this is charts, there's more price action that happens after this, but I wanted to just share the end of the year charts that I was looking at. And, copper had made a big move off the bottom. I mean, clearly people were starting to anticipate this China reopening. So we saw copper coming off the bottom, really responding well. We saw the dollar continuing to fail off those September highs, just looking increasingly ugly, really needing to hold this 102.12 level that I was looking at from a fib retracement level, that 50%, and subsequent, as you know, it has come off and closed below that level. Still struggling right in that space, but clearly that was not a suggesting of an imminent recession to me. The other thing we saw was that this thing, which is the Hang Seng, was absolutely moribund and just crashing, and then all of a sudden it turns around. So clearly people knew that China policy was ready to shift, and I think that's one of the big drivers in terms of that reopening that may put us into a short-term, what I'm referring to as a Goldilocks type phase. The other thing, that we've observed is inflation in the U.S. has come down pretty sharply. I mean, if you look at this on a rate of change basis, it just keeps coming lower and lower. And it's such that I commented that real wages rising somewhat, and core PCE, as that begins to decline on a rate of change basis, that means that consumers are going to have more money in their pocket and are going to be able to spend. And you can see that's happened certainly in Q4 with airline stocks continuing to do well. That services demand continues to be strong. And so with all that led me to conclude that, we may be time to get that Goldilocks type playbook out and to start to balance that against my core position or my core view, which is really a longer term deflationary outlook and moving into sort of a recessionary environment. Last week, so that, we started the year, we really started, picking up strength. Risk assets responded really well. Dollar continued to fail. And then yesterday, we got the retail sales number in the US. That obviously declined some more. And so, that equities held pace for a moment in time, and then, basically sold off pretty hard into the close yesterday, and has managed to sort of hold 3,900 today. On SPX, and it's really in this sort of decision point in my mind. Where are we going? Are we going to break above 4,100? Or are we going to take out 3,850? I think taking out 3,850 makes me want to think about really putting on a full-time playbook on the deflation side. What I will say though is that I thought that action yesterday in TLT was particularly interesting. We spent a year, where 60-40 portfolio allocations have just gotten smoked. And yesterday we had a situation where, SPX down, TLT up. I don't know that that's a sustained basis, but it definitely raised an eyebrow in my mind as to whether or not that would be something that's durable on a longer term basis. Let's see here. The other thing that sort of stands in the back of my mind, and where I'm thinking about this on a much longer term basis, meaning 3 months or more, is this, which is that inverted yield curve, which just keeps getting ugly. This is the 10-year 3-month ratio. It's closed yesterday at minus 132 basis points. This is a predictor of recession. And so I think that's where we're going, unless there's some immaculate soft landing that people seem to be talking about. So my core view at this point in time is that we have a window here, maybe a quarter of some level of Goldilocks, risk assets continuing to work throughout the quarter. Clearly, we have the FOMC meeting on the 1st. That's going to be an issue. We have ECI, which is the employment cost index, out the day before that. I think that's going to be an important metric for Q4 for the Fed to look at. They're backward looking at this point, not forward looking. And so what they do with liquidity and how that all plays out, I think is going to be important in terms of where we sort of position broadly. From a positioning standpoint, what I like and what I continue to spend allocate resources to is gold, GDX, silver, metals broadly. So long as the dollar remains weak, I think we have an opportunity in that space. I'm liking China. I started allocating at the end of last year to KBA. I've allocated also recently to CHIQ, which is China Consumer. I think those have some opportunities to move forward. I have a hedged TLT position. I say hedged because I'm not 100% convinced we're ready to go there yet. So I hedged my TLT long with a TBT short, and I sort of trade around both of them, just sort of scalping on an intraday basis as I can. I guess that pretty much says it. But I think that steep yield curve tells you where we're going, and I don't know how we get out of that. I just really don't know how we get out of that without some reduction in earnings and some sort of next phase down on this thing.
Yeah, it was really interesting, and actually it's great that you mentioned copper and China reopening, because before this call, Ramadan and I were talking, and Ramadan just said that, hey, look, Australia is not falling, and so I think that watching EWA or Australia in general can also provide us some opportunities, at least for pair trades or spread trades, because actually today I just opened the chart and actually Australia is a great example of what you said about China and copper and iron ore as well, of course. Okay, so let's continue with macro, Ferber and Christopher. So what changed from a macro perspective in your opinion over the last 2 weeks, and what are your views on financial markets?
All right, so the last 2 weeks I tried to make sense of the market, and it was pretty hard because I saw some big growth dislocations, as I would like to call them, in basis of stock performing on a monthly basis, and as well as interest rates and their spreads and how they're moving. This doesn't really make sense with respect to my models. So I prepared some data as usual, and I share my screen real quick. So basically, I tried to make sense of the recent thematic, which is called a Goldilocks scenario, as Ted already mentioned. So what I basically did is I have my growth and inflation framework, and I tried to make sense of the movement of some of the USA sectors. And what you can basically see is on the left side is the chart with the implied probabilities, which I predicted with month-over-month returns on stocks. So you can have consumer discretionaries, utilities, energy, financials, small caps growth, and basically all sectors. And it's pretty noisy. You can see that into year end we are getting some reflationary as well as real growth or Goldilocks probabilities. It's the red and the blue, but these things really are not as stable. So the model does not have that much predictability overall. So it's quite noisy, and it actually shouldn't signal any real economic growth output. If we look at monthly returns, and based on the overall valuation due to hyperfinancialization and
several other factors, the R squared of the model is not really that good. So that's pretty tricky. On the right side, you can see the predicted regimes with stock momentum. So I tried to use some simple indicators like if this does the stock make higher highs on a time frame of 1 to 2 months. And what you can basically see is that we did move pretty quickly into disinflation after July 2022, and then moved back to stagflation. Then we got some growth signals, but as well, the model output is pretty noisy. If we look at stock momentum, we should have a Goldilocks scenario right now, but if you look at the past data, it's really noisy, and we should not really use stocks as an indicator for overall economic growth output. The same thing I did was the same thing with the weekly regime probabilities based on interest rates and their spreads. So I used my interest rate model, and you can see that we are getting some divergence in the growth probabilities and the outcome of the regime probabilities. So you can see that we are basically in a disinflationary environment if I only use interest rates as a signal. And what's funny about this is that you can measure with this model the difference in the implied growth probabilities. What do stocks say about future economic growth or actual economic growth, and what do interest rates signal currently? And the blue line you can see on the right chart is the 3-month moving average of the monthly implied growth probability. And each time the blue indicator moves upwards of 0, it signals that stocks price in more growth as interest rates does. And you can look at the 08 and 09 timeframe. We got this same signal. It moves to the 0.2 level, and now we're at 0.4. So if we look at this indicator, it's the all-time high. So this divergence was never this high. And if you look at the index year-over-year return, it actually correlates negatively to about minus 0.4. So each time this difference measure is above 0, stocks tend to move below the 0 year-over-year rate on a annual basis. So in my opinion, we are still in a very bearish phase fundamentally, and interest rates based on the historic signaling perspective, they should be weighted much more in our overall outcome and portfolio construction. So disinflation should continue, in my opinion, in the next months. But given this crazy market, we actually don't know if this really holds true or not. And another chart I prepared is the same thing based in Europe. So I get these growth dislocations all around Europe and in the USA. So you can see basically a probability of falling growth on the left side in a chart with index year-over-year returns, and daily correlation is minus 0.5. So it's a pretty good signal in my opinion. And if you look at the right chart, you can see the latest output of the model, and we're getting some decent bifurcations in index year-over-year returns as well as falling growth probabilities. So these index year-over-year most likely tends to catch up to the falling growth probability. And if I use this leading characteristic of the model output, we can see something like this. With a 120-day lead, so it actually mimics the recent stock performance pretty good. If you look on the left side, it even signaled the recent price momentum in Europe. And if I use this 120-day leading characteristic, it's possible that we should see some decent negative returns over the next months. And this is basically my my core short position. So a country in Europe like, or you should short in Europe, shorting Germany. I think these tend to have some decent risk reward factors in the next months. And on the right side, you can see the historic performance of the 120-day lead versus the annual return of the given index. Yeah, and that's everything for today. So I kept it real short this time.
Okay, so thanks, Christopher. Raphael, so first of all, we have big news. Raphael started trading options.
Yes.
So how is it going? What are you doing in the markets and what are your views?
Yeah, so before I go into the charts, yeah, indeed, I've said many times I don't like options. The reason I don't like options is because several years ago, decades, I did some bad mistake in options, and I'm not a gambler. So basically, if something bad happened, I just don't do it anymore. Simple logic, right? But yeah, this time it was quite interesting because I was actually preparing for this. I will share the screen here. Let me make this one smaller. Okay, so last time I mentioned the setup for the VIX. So basically, the way it works is anytime you get the trade of volatility of VIX to rejoin the trend of volatility of VIX, this is the time when usually the trade will, the value of volatility will actually crash. So I have highlighted the when it happened in the past with the yellow circle. So I mentioned this thing last time, and so we were in the sweet spot, and I was waiting for the hourly to confirm. So on the daily, you can see that we have reclaimed actually the trend, so which is good. And on the hourly, we got the trigger, which I was mentioning the last time. I was waiting for the value of volatility to reach a particular level, and also the value of the trade of volatility to reach a particular level. So we got actually the perfect spot. It was at 18. I actually waited the next day to get a confirmation of a lower high in volatility. So I took my my position there for the put. So I chose March 17, and I used the low of the range as the target for the put. And it was also so this place was actually a good spot also to short pretty much everything. I had a lot of triggers in the 2 days leading to that, so I will show you what actually triggered. It was pretty insane. So you had stuff like VXM. I will launch this one. So should work. I am in hourly, sorry. So in daily. So you had the buy signal here with the volatility at the top for VXM triggering. You had I don't think XPX triggered. Let me check if yeah. You also had the SPX trigger, so right at the top. You had the US 500 trigger. Right at the top again. You had the futures trigger. Yeah, right at the top. I think NASDAQ triggered, so the cash one. maybe it disappeared because it corrected the day it opened. That can happen. I think you had DJI. Yeah, DJI same. Russell. I mean, it was just a party in the alert. I was just bam, 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 bam. I also some custom ticker I use. And for Europe is more sensitive, so I usually display only the what I call the mega cell. It's the most extreme signal, the mega cell. And you had so yeah, no, not CAC. You had the DAX, I think. Yeah, the DAX triggered here. So I mean, yeah, the only thing missing was in the picture was dollar, but we have addressed this issue. I mean, for now, it's just doing what it's been doing since it topped. So basically, volatility is going nowhere. We even had a spike in volatility there. I can see my matrix is going crazy on the daily, so we could have a buy signal soon, but I'm not doing the same mistake I did there. When the first buy triggered, I was so bullish on the dollar and I thought, okay, this is it. And it was actually a fake one. So now I'm waiting. I'm going to see confirmation also in Euro USD would be good. So that's basically what I'm looking at. And as for individual stuff I want to address. So for example, one interesting stuff was is the US oil. Let me check here. Sorry. No need. No, sorry here. Is the volatility of oil? It's just doing just choppy action. And I'm in the camp of actually inflation coming back. So I'm thinking about the fat tail of China and maybe Russia launching another offensive. And I'm thinking this fat tail is these two fat tails are absolutely not priced in, and I'm looking at oil because of this. I would not be surprised actually to see oil breaking trend and ripping, but for now, nothing. I had a short oil that I took down when oil made a higher low here, and for now I'm waiting. I'm not sure what's gonna happen. I have addressed also gold. For now, nothing, no spike in vol. I'm still waiting for it. I mean, I have we joked about it with Ram the last time. We are waiting to get in with size, but for now, it's just keep ripping. It's ignoring every sell signal we are getting. We have the volatility that is near the low for its trade value. So it's basically the red line is the point where trade of volatility of the asset is getting really overextended, and we are basically here. I mean, maybe a few more days, and usually what happens then is I have addressed this also, but volatility will start to spike up to allow some relief for the trade and maybe go back down or have a trend change. And for now, we are just vola is stuck at the bottom, and trade is just getting lower, which explain the rip in gold. You can see it's actually bullish. This is my bearish bullish signal. So it was bearish until 8th of November. I think MFR switched on the 10th. So it pretty much aligned. I didn't take the shot because I thought it was a fake signal, but hey, it happens. Last time I addressed also platinum, and this one also switched trend. This one actually in September, and volatility of the asset was crushed. And same principle. This was the lowest value I had observed before a correction, and for this one actually volatility is spiking up. So is it the start of a sell-off for silver and gold? I don't know, but I can see that platinum volatility is rising, and the first test should be the retest of trend for the asset. So this I'm monitoring to see if it holds and I can buy, or if we actually break trend, and then that I would need to wait for my buy signal. Silver is looking like gold. Same idea. It's just going lower and lower and lower. It's not respecting the sell signals, and volatility starting to rise above trade. So is it a warning? Is it the beginning of something? I don't know. Gold did that and then revert back to the low for its volatility. So for now, I'm waiting. Yields. Yields also are quite interesting because you've had a spike in vola, and we are actually coming into the trend of the asset. And so far in the past, every time it was tested, it held. Yes, okay. It held. So it's big test here. I expect it to hold and actually to have the 2-year going higher, but we have a big divergence regarding where the rates are going and if the Fed is actually serious or not. So this is a big cue. This is a big time for 2-year. Will volatility start to rise and we actually break a trend that has worked since it's very far in somewhere here in September 21. It's a very old trend. Or do we continue? And where does it go from here? So US 10-year, my trend is more sensitive, but the buy signal have worked so far. So it triggered actually today, and I don't know if it's going to go lower or it's going to go higher. I didn't act. I didn't short bounce. I didn't do anything. I'm just waiting. I'm sincerely not sure what's going to happen regarding rates later. I got the same buy signal in the 10-year French 10-year. So usually it's pretty accurate. Yeah, I think that's it. Yeah, regarding what you have addressed before regarding the how to say, not the cash but the liquidity available. We saw actually, yes, it has increased, so that could explain what you were addressing before, Ted. I'm watching also another thing is the unemployment. Yeah, jobless claim. So what I'm watching, and I discovered this by checking actually the previous recessions. What you get usually before the previous recessions is actually trade of United States initial jobless claim to actually go higher above the trend value. So I've checked it, and I don't know why, but it's working as a signal. So I'm watching this, and you can see we are still pretty far from recession actually mattering in terms of signal. Yeah, and I think I have addressed all of this. Volatility of Euronext is also breaking out. So this is VSTOXX. So as far as I'm concerned, it's starting to break a trend, and I want to see if it's sustainable or not, but it's looking great so far. So yeah, that's what I'm currently looking at.
Okay, so yeah, so first of all, I wanted to say that it's great that finally this time we have some questions in the chat. So we will address those at the end of the video. And yeah, I want to encourage everyone, if you have any questions, feel free to write them in the chat and we will do our best to answer. Okay, so some changes from my portfolio perspective. Finally, on Tuesday, I don't know, maybe Brian and others, maybe you mentioned you saw that SPY sector correlations went quite a big move up yesterday. So intraday I really liked that, and implied volatility was still relatively low. Of course, when market is going down, IV is going up, but it was and actually still is relatively low. So I took a put spread on SPY 60 days out, basically. So yeah, so now at least I have some positioning in my portfolio. So not only scalping futures like I was doing for months, and I'm still doing, but yeah, finally I have at least something, and I'm looking into some other different things. So yeah, those news. What I wanted to talk about today is my game plan for the next couple of weeks or months if volatility goes up. What I mean, I'm looking at VIX 25. It means I want VIX to go at least close to that level, and then I will open iron condors on SPY and IWM. I really like iron condors, and but those only work from my tests and experience. Those only work in higher volatility regime. In lower volatility regime, I like calendar put spreads, but other factors don't allow me, of course, to trade those. So I was not doing that. Yeah, but if we have a couple of or more red days next week, so maybe I will open some iron condors, and actually I really hope that it will happen. So from a signals perspective, what I really like, and Ted was talking about it a little, and others. So I really like gold. I mean, I'm really monitoring gold just because of Hearst exponent. So if you saw on MFR and maybe that both 3-month and 1-year Hearsts are relatively high for gold. We are talking 3-month like above 0.7, and compared to Hearst exponents for SPY, IWM, and other indexes, this is really high, and I really like that. So what I wanted to do is to search for entry point for gold as a spread if we have some dip. So, and from spread perspective, of course, I will still need to find what to do with that, because I rarely trade directionally. But yeah, actually, based on macro and what people were talking about macro, and based on my signal perspective, I like gold, and I rarely like gold. So I just wanted to mention that. I thought it will be interesting, because gold is not something I talk a lot about. So yeah, I can show you a couple of charts as a comparison. So now, yeah, I will open a couple of charts. VCWA, I was just checking Australia based on our what Ted was talking for Chinese. So looking into tomorrow, there is one thing that I don't like is, of course, MFR upside downside ratio, which is 2. For SPY, we have a 2.13 upside downside ratio. So yeah, I really don't like that. So there is a big risk that we will. Okay, sorry, for some reason I can put the chart on that. So anyway, so for SPY, we have upside downside ratio of 2.13, which is of course not what we want as people who have bearish views. So there is a big risk, in my opinion, that tomorrow we can have a green day or at least a nothing burger. So yeah, tomorrow's close will be really important. So yeah, if we have a red close, it will be good for bears. If we have a bullish close, I would wait for next week to see what's going on, because we can have a small squeeze from our signal perspective. I don't expect that we will have another from signal perspective. I think BMR is over. I don't think we will get a very big squeeze. Of course, we'll see. But yeah, there is a big risk that tomorrow we can have a green day, so be careful about that. And actually, basically all SPY sectors have positive upside downside ratio except XLE. So yeah, XLE is the only one which is not with positive upside downside ratio. Another thing is Hurst exponents, and I have prepared the numbers, so I will just show them. So on a year basis, what I wanted to mention, of course, is gold. We have 0.72 yearly Hurst exponent, and I will touch on Hurst exponents a bit later because I saw a question for me about that. So, but when I see such a big Hurst exponent, it always sparks an interest in me. So I will monitor that thing, and it agrees with macro also, and I like when signal agrees with macro. Of course, I always choose signal. But when both agree, it's even better. So I will watch gold really closely. And relatively, QQQ and SPY and IWM don't have a really high Hurst. So I would like to see Hurst, 1 year Hurst going up. Because for now we are still in a chop territory. So of course, with rising volatility, we can get basically a lot of moves as always to both directions, but of course bias is bearish, and I already have a put spread, and I plan to open some other positions in upcoming 2 weeks if volatility goes up more, because for some strategies I use, I need higher volatility. When volatility is relatively low, it doesn't work that well, and then I choose to be in cash or just intraday trade futures and other things. So that's what I was doing for months actually. And on a 3-month Hurst perspective, I also see something interesting. So TLT. So TLT is very strongly trending. So watch that really carefully, and especially watch stock bond correlations. So if we see those correlations going back to positive territory, which is what we need, at least what I need for short book to work really well. So yeah, watch SPY TLT correlations, but actually TLT is trending very strongly. That trend is very, very strong. On a 3-month basis, we have 0.72 Hurst exponents. And for comparison, gold, while it's going up, I mean, 3-month Hurst is going up slightly, but it's 0.62 on a 3-month basis only. So if gold behaves like I think it will behave, so I'm sure we will see higher Hurst exponents. So yeah, I will watch that really, really closely. From SPY sectors, XLF is also trending very strongly with a Hurst of 0.72. So that one can be a good candidate for a spread with other sectors. For example, XLV or REITs, because from correlation perspective, that can be something to play out. And of course, for direction, watch the signal. So trends and Hursts, because I think that XLF will have different behavior compared to other SPY sectors in upcoming month or so, from my signal perspective. So that's what I see. To recap, basically, I want sector correlations to remain high, and they are relatively high, so it's a good thing. But I want stock bond correlation to become positive. And based on what's going on in the volatility space, so especially VIX, actually now I see the main difference from months ago. Now I really see opportunity to ride the shorts. So hopefully we'll manage it well. Yeah. So that's it from me, that from what I'm doing. So I don't know if anyone wants to add anything before we start taking questions, then it's about time to do that.
What do you think about the dollar, Vi?
Yeah, so based on action in the futures, I think that max yeah, Ramadan and I were talking about that. I think that max for euro dollar, max where it can go in mid to short term is 1.10, 1.1050 maybe. So even if dollar does not reverse now, I mean 2%, additional 2% max, and we will have an opportunity for dollar. Of course, I want it to happen faster, as we all do most likely. But yeah, the highest I see is another couple percent in euro dollar, so approximately couple percent in DXY maybe. And yeah, like I said in the beginning, yeah, a lot of people, me included, were really, sure, convinced that the dollar will move first before stocks, and I was watching the dollar as the main signal, and of course that's not what happened. But yeah, what we need is the dollar to reverse, and my opinion that it will accelerate the bearish momentum in stocks very strongly. So for now, yeah, the only, well, not the only, but the biggest thing that is missing is dollar reversal. Yeah. But from my levels and my signals, and in futures, I use basically order flow levels, so big volume zones and so on. So I don't see euro dollar higher than 110. Of course, I can be wrong, but I don't see that. So let's go to chat. So Capitan Potato says, "Hey, why?" So hey, Capitan Potato. Also, Benjamin is happy that Ted joined, so we are also happy that Ted joined. So okay, so Dan, got a question for why? Oh yeah, this is a very popular question always from spaces and emails. So please comment on the fractal aspects of a Hurst exponent and how to incorporate that in the process. So yeah, so I use Hurst exponent as a measure of trending asset versus mean reverting asset. So simply put, Hurst exponent, high Hurst exponent means that asset is trending, and low Hurst exponent means that it's mean reverting. What is low in all the papers and based on theory and work from the greats like Mandelbrot, Hurst itself, and Edgar E. Peters, of course, Hurst above 0.5 is what is considered to be a trending asset, and below 0.5 is a mean reverting asset, but I don't think about it this way. I think about Hurst exponent based on the amount of data we are using to calculate that. Because for that to be true, I mean that 0.5 level, it usually takes a lot of data, at least 4 years or 10 or even more in some cases. But for us as a traders and from a risk management perspective, I have a 4-year Hurst, and yeah, but I rarely use that. That's why we decided to add 3 month and 1 year into perspective. So for me, 1 year Hurst above 0.6 is the trending asset, and 3 month Hurst above 0.7 is a trending asset, and 1 year Hurst above 0.6 is trending asset. That's how I think about that. The easiest way, I said that once in Twitter Spaces, the easiest way to think about Hurst exponent for me is it's the probability of asset going to the same direction tomorrow like it did today. So simple example is that let's say 3-month Hearst is the 0.7, so basically there I can give it a 70% probability that based on 3 months of data, there is 70% probability that asset will go tomorrow to the same direction where it went today. So and actually it makes sense from math perspective, because basically even if we take the original definitions of Hearst, I mean, Hearst of 0.5, it means it's random. So, and yeah, what the 0.5 means, it's 50%. So basically 50% chance up, 50% chance down. So I just translated it to easier language for me and hopefully for you as well, that basically I view it as a probability of asset going to the same direction. Now, what are the fractal aspects? So fractal aspects are hidden in the way how Hearst exponent is being calculated, because of course I have some modifications from the original papers, but basically for you to calculate Hearst exponent, you need to see what's going on in that asset on a lot of and really a lot of different time frames. So starting from minutes and ending so days, weeks, and months. So if it's a 3-month Hearst, basically to calculate 3-month Hearst, it takes 3 months and then all the possible combinations of days and so on to calculate that. So usually when I think of fractals in markets, and not only in markets, is basically to be able to see what's going on in different time frames, different time horizons, in most cases, also different assets at the same time. So you are comparing signals from minutes to days and weeks and so on. So yeah, and actually all of it is required to calculate Hearst exponent. So this is a fractal aspect. So now how to use that? How I use that in the process? So hopefully it will help. Of course, I will repeat myself. I said that multiple times, but basically it's a good metric to see what strategies you can use for each asset, and maybe also it can tell you that at this moment asset XYZ is not tradable at all. So what I mean, if Hearst is low, mean reverting strategies work best from risk management perspective. So what I mean by that is usually short-term things. So like a lot of people like to do, so buying at the low of the range, shorting at the top of the range, and so on. And if Hearst is high, sometimes it makes sense to use longer term ranges and maybe allow that position to breathe, because if asset is really trending, maybe it makes more sense to have higher targets, of course, in the range of your risk management. So no need to do anything stupid, but basically when the Hearst is high, maybe it doesn't make any sense to just close that position after you made a couple of points. So one way is doing this, and another way, of course, is to screen for when you have I like to trade spreads. So of course, if I have two candidates for a spreads based on correlation and spread charts, I also like to see Hearst exponent for each component of a spread, because if one asset is trending and another asset is choppy, it's not a good spread. You don't want to do that. So yeah, but that's basically it. I hope it helps, and yeah, if someone has any questions about Hearst, so of course let us know. I will do my best to give you more information. Then Capitan Potato also asks, is there an MFR Discord channel? So no, for now we don't have a Discord channel. Maybe in the future, but I don't think. Rafael, what do you think about Discord channel?
I joined Discord to interact with Donkey. It's a pity he's not there today, but yeah, maybe I'm too old. I mean, it's messy and I don't know. I don't like it. So the problem is if we create one, I will need to manage it. And
Yeah.
I just don't like the platform. It's not very. I mean, if you have a question, just email it to us, and we reply very fast. And if I don't know the answer, I ask why. So just send an email, and we're gonna tell you what's up.
Yeah, and of course, yeah, like Rafael said, yeah, send us an email, or we will do our best to answer. Okay, Rafael, there is a question for you. So Dan asks, can you comment on your vola script for USD JPY? Wondering which signals were triggered since October with a blow off top.
The let me check again. Yeah, USD JPY is the perfect image of DXY. I mean, it should answer the question. It's just like this. And no, yeah, I had a fake out, actually a fake signal. Same day as DXY on the 15th of November. And it was only chance this pair had to bounce, and also DXY had to bounce. And it didn't work. It didn't take it. So for now, we are waiting. We are waiting for DXY to trigger the buy signal, and for USD JPY also to trigger. The issue I see with USD JPY is my matrix is still has room to run down, and while DXY actually looks better. So we wait. I mean, the signal will come. We just have to wait. And there's no point in rushing to buy the dollar, because some macro view that is supposed to happen, and the dollar is supposed to work in this macro setup. The dollar is not working. It broke trend, and since then it's going down. So just wait. I mean, especially if the setup that is waiting for us is truly coming. DXY is gonna do another all-time high, at least another cycle high. So what's a couple of percentage if we're gonna make like a double digit? I mean, why rush? So no signal. USD JPY looks like DXY, and we are still waiting.
Yeah. Also, Dan says that if we want more questions, we need to do incentives. So short-term trial for best questions. Well, we already have an unlimited permanent trial which never expires. So I think we have enough incentives, right?
Yes.
Yeah. Okay. I fixed the issue with screen sharing, so I will just quickly do one chart. I just wanted to show to people what I mean about the high Hurst exponent. So hopefully now people can see my screen. Here we have a historical 1 year Hurst exponent for 5 assets. So it's SPY, QQQ, IWM, TLT, and GLD. And red is TLT and purple is GLD. So I think it's very easy to see the strength of trend for gold, for example. So I just, from risk management perspective, without telling you what to do, because everyone is interpreting things differently and have different strategies, but I just wanted to say, don't ignore that trend, and don't do risky stuff like, for example, going against that trend. So basically this is the main chart I wanted to show. So now I will stop sharing, and hopefully now everything went fine, because I have multiple monitors, and for some reason before I couldn't drag that chart into another monitor. So sorry about that. Yeah. So I'm back, and yeah. So this is an example of high Hurst relatively to other assets. Okay. So I don't know. A couple of weeks ago we made some bets.
I would like to ask Ramadan, are you still short dollar? Short UUP, I mean.
Was I short dollar last week?
Yeah, you told us you were short UUP, I think.
I think I was long FXC last time.
Okay.
So I got rid of that. I am currently long UUP, long FXY, and long FXF.
Oh.
All about equal weights. Yeah.
Okay, okay.
So yeah, just in case I'm wrong on the dollar, because I think what's suppressing the dollar is the yen, is the
Yes.
whole BOJ thing. So I'm long the yen and the dollar, just in case and FXF is another safe haven. So these are all like safe haven in case we go into a recession, global recession. So hedging my bets on these currencies, I guess.
Okay, so we should rip on the dollar because last time you said
I'm right now, it's on weekly trend for me right now. So if we break below these lows, then I'll probably get out of the dollar and keep my yen and Swiss franc positions.
Valle, you are gonna ask for the bet, right?
Yes, yes,
So-
yes.
Yeah.
Sorry, I quickly wanted to share the for me my global macro spreadsheet. So for everybody, maybe to gain some insights or some ideas. So quickly just share this one. All right, so you can see weekly, monthly, and quarterly regime probabilities as well as probability assessment. So it's basically the whole globe. What I find quite interesting is with respect to Chile, which is currently at a real growth regime with respect to the movement of copper. So it's basically a proxy for it. So you can monitor it, as well as Hong Kong, which is on a weekly regime probability at basically 63%. And this one improved like 25% in the recent 3 months, if I remember this correctly. And this weekly regime probability, I got this signal maybe like a month ago. So it's actually trending on a pretty good basis, as well as South Korea. South Korea is currently at a real growth regime. So I find these countries pretty interesting for basically it's a view on China going into reflationary mode probably in the next month, so we can start this whole global trade thing again with copper, maybe oil, as Raphael said. And for me, this is maybe there's some spots where you can gain some additional return, as well as Turkey. Turkey is the only strong long if you look at the suggestions. And this thing performed crazy over the last months. So yeah, but if you look at Europe, everything is either in stagflation or disinflation. And so for this region, it's not that good. Yeah, for the viewers, you can screenshot it if you want, or look at it later. This is something I like to look at every Friday when I re-update the model.
Can you post it on your Twitter, and I think we can repost it on MFR.
Yeah, of course.
Twitter page. I mean,
I do. Tomorrow I post it.
Okay.
I update it tomorrow, and we have a look again.
Got it.
All right.
So for the bet, I was thinking about will VIX be at will have reached 34 by the end of the month, because I actually think VIX will go to 34 by the end of the month. And
First we need to talk about our previous bets, I believe.
yeah, but Ram won. I mean, why you want to torture us? I mean, so the previous bets were the VIX lower base, and actually Donkey won this one. He said 19, so he was the closest. And actually he said 18, but because we laughed, he said okay, 19. He was right. And DXY bottom in, and Ram said no. Everybody else said yes. He was right. And gold has stopped for the next 2 weeks. We were all wrong. So yeah, it happens. Huh? So so the bet.
So we are great contrarian indicators.
Yeah. Yeah, some guy will create a inverse page just with our text. That's bad. So the VIX above 34 by by end of month. Do you like this one?
Yeah.
Oh, okay. So VIX above 34 by end of month. Okay. Who say yes? Who say no?
I say
No.
End of January.
Yeah.
End of January. Yeah.
You really see something coming there, huh?
Yeah. I mean,
the world right now.
Wow.
The thing is, I really think we're gonna
How often
crash.
does VIX 34 ever happen?
No, I think VIX will go to 50, but not necessarily in the end of a month. So I will say no.
Okay. If I say no, okay.
Yeah, I'm gonna
Anybody
say
else?
probabilities are just not there for me.
Okay.
Yeah,
Ram?
yeah.
Yeah,
Okay.
for me as well. Say no.
Okay.
Too short of a time frame.
Okay.
Yeah.
Yep.
So nobody say yes, right?
Only you, yeah.
Okay.
Can you extend it past the Fed meeting, which is on February
No.
1st?
No, just end of month.
I'll say
We can
yes.
give them a 24-hour grace period.
I have
Okay.
absolutely no idea, but I'll say yes.
24-hour grace period. I'll allow it.
I really believe we get a spike in vol and then another crash in vol. I mean, that's why I push this.
The
this bet.
spike goes to 34, the spike goes to like 25 and then crashes.
I think we go. VIX will go just crazy for like 3-4 days and then just go.
Hey,
back
I
to
hope
crazy.
some position for it. I just don't see it.
Yeah, we will see. I mean,
No, for now, longer term range on MFR, longer
know,
term
yeah, I
has
saw.
upside to 26. So
Yeah, I saw.
I will trust my signal. So
I saw.
Hey, Vi.
which of course we all know that signal changes every day, but I will trust my signal for now.
Okay, let's go with
Hey,
this.
hey, Vi, how does the longer term? Because like the thing with VIX, like it just goes from bearish trend to bullish trend, and it just rips the bullish trend when it starts going. How does that affect like that longer term range? Like would that 25 move up a lot if we got a big spike and VIX went to bullish trend?
No, not exactly. If it continues to happen, yeah, but not immediately because upside and downside is being calculated separately. And again, for both shorter term range and longer term range, it takes a lot of different periods. So in the case of longer term range, it's like 3 months or less. So basically you can think of it that it says takes like more than 60 days, and then all the available possible time frames from like more than 60 days to like just a couple of days, and then it combines the upside and downside based on math separately. So not immediately, no. I mean, if just we have a big spike, actually in some cases even it can show that upside is not big because we already had the big spike. So yeah, but to answer the question overall, I mean, if it's not a spike but like a really serious rally over the multiple days, yeah, upside will go up. Yeah.
One last bet is, will oil be bullish or bearish trend in 2 weeks?
Bullish.
Bullish.
I think oil's about to rip.
I do too. I added
Which-
some TBE this week. think
Yeah,
it's
I mean,
gonna
like,
go.
but that just makes me completely like not thinking there's any recession. Oil's just about to rip the moon, you know? Like, I think like the biggest thing that kind of turned me the last 2 weeks was that the oil couldn't break over the last, it's been sideways for 6 months almost.
Yeah.
Like it just is not dropping below here. It's just not. And like your you know, the cosmic trend graph, it's like just sitting there.
Yeah, it doesn't know where it wants to go.
Yeah.
So everybody is bullish?
No,
No, Ram, okay. Ram bearish.
I'm actually short XLE and gasoline UGA right now, and I'm getting squeezed a little bit. I mean, I could be wrong, but right now I'm betting no.
Okay.
I agree on XLE, but no, I don't agree with oil this time because risk premium and stuff. So yeah.
So
I agree with
verify.
no, I'm
UGA
bullish.
looks
Bullish,
great.
okay.
I say bullish. I said that I agree with Ram on XLE, but not oil
Right.
itself. I mean, so yeah,
Okay, we have our two bets.
yeah.
Everybody's bullish on oil. Am I the only
Yeah.
bear?
Yeah.
Last
Yeah.
time you were right on DXY, so
I would listen. I got 100% hit rate so far. Well, no, I got wrong couple ones. Never mind.
Yeah, so we have a bit spam on a chat, so some beautiful girls are saying hi. So those bots are okay. So yeah. So I don't know if anyone wants to add anything, and if
Do a bet on gold too, Raf. That one might have a little more disagreement.
2 bets are enough.
Or the 10-year. I'm actually curious on
You're on
people's
mute.
opinion on the 10-year
You're on
though.
mute, Raf.
What do you guys think about the 10-year?
in 2 weeks, we can do 10-year and gold in 2 weeks.
All right.
I mean, I would be surprised if gold doesn't correct in the next 2 weeks. I mean, I would be amazed. I mean, I checked the trade value, the trade vola value. I mean, we are already in where actually gold is when you have the crazy ramp. So it's not surprising, but the value now is getting insane. So I would be very, very, very surprised if it doesn't correct. Platinum is doing it. And next should be silver, and then will be gold. That's my guess. I know you're short, Bry. I know that's why you wanted to make a bet.
TLT, yeah. TLT.
Yeah, short bonds and gold and stocks.
No, I'm on gold.
Diversify portfolio there. Yeah.
It's the Armageddon portfolio,
Yeah, long more.
long gun
Long more.
stocks. Okay, we good, bye.
Yeah, think so. So thanks everyone for joining. I hope this discussion was interesting and useful. Again, I want to encourage everyone to ask questions, and it's not about incentives, because the goal of the questions is to help you, not to do anything else. So if you have any questions about markets, about the process, and so on, next time feel free to ask them. And yeah, and I think that if we have more questions, this show will be even more interesting and useful. So thanks again. Thanks, Rafael, Ramadan, Christopher, Brian, Ted. It was great to have all of you here. And manage risk well, and see you in 2 weeks. Bye, everyone.
Bye.
See you guys.
Bye-bye.
Bye. Thank you.
Okay, we're off.